The inflation rate in the United States for June was 3% year-over-year, which is better than expected. Additionally, the anti-crypto law rejected by Joe Biden will finally not come to light. But here, we ask the following question. What if Bitcoin and Ethereum do not support the defense zone and start to fall? The inflation rate in the United States has shown a notable slowdown. According to the latest report from the Bureau of Labor Statistics, in June, the Consumer Price Index recorded a monthly drop of 0.1%. Marking the first decline since 2020 and a year-over-year rate of 3%, the lowest since March 2021. These figures are significantly better than market expectations, which anticipated a year-over-year inflation rate of 3.1%. This drop in inflation brings the country closer to the 2% target set by the Federal Reserve more quickly. Lower inflation reduces price pressures and can facilitate a more relaxed monetary policy. Given these figures, investors and analysts now consider it more likely that the Fed will decide to cut interest rates in the near future to stimulate the economy. Interest rate cuts tend to lower borrowing costs, which is seen as a positive boost for economic growth. In conclusion, the significant drop in inflation in the United States and the growing expectations of interest rate cuts are reshaping the economic landscape. The Federal Reserve is now in a more comfortable position to consider measures that could further boost economic growth. Regarding cryptocurrencies, take a look at the latest updates on SAP 121.
In a significant turn of events, U.S. lawmakers failed to overturn President Joe Biden's veto, which maintains a controversial rule by the Securities and Exchange Commission SEC. This regulation prevents banks from custodians of cryptocurrencies like Bitcoin. The House of Representatives voted to override the presidential veto with support from both Republicans and Democrats, but did not reach the necessary majority to override it. The controversy centers on the SEC bulletin known as SI 121, which requires companies that custody cryptocurrencies to record client holdings as liabilities on their balance sheets. Critics argue that this measure practically prevents banks from custodians of cryptocurrencies on behalf of clients, treating them differently from other assets and increasing capital demands for banks handling these digital assets. Previously, both the House of Representatives and the Senate voted to overturn this rule before Biden vetoed it. The White House argued that undoing the SEC measure could disrupt the regulator's work to protect investors and maintain financial stability. Representative Maxine Waters mentioned that the SEC and the banking industry are in discussions to modify the policy, although this dialogue did not prevent the legislative attempt to overturn the rule. Despite the bipartisan effort, the vote shows that the Biden administration remains firm in its stance on cryptocurrency regulation. This situation reflects a growing political disagreement on how to handle digital assets and their custody by banks, which could have significant implications for the future of cryptocurrencies in the U.S. financial system. We see this as a positive development since this regulation, SAP 121, would prevent banks from holding cryptocurrencies. With President Biden's veto, it had to return to the House of Representatives to override the veto. However, they did not succeed. It's clear they want to regulate the holding of digital assets and cryptocurrencies, but they are still unsure how to do it and cannot reach an agreement. What we do know is that this rigid measure will not come to light, at least not for now. And we say it's rigid because it practically nullifies the possibility of banks holding cryptocurrencies, as they would have to list them as liabilities on their balance sheets, which is practically unfeasible. Now, let's talk about Bitcoin, but first.
Welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity.
And now back to Bitcoin. On the screen, we're looking at the 4-hour chart because we're going to discuss a slightly more macro process. A few days ago, we had a significant drop in price, which has caused a black swan event, meaning the break of this macro structure. Then we see how a smaller structure is forming, which seems to be a flat correction pattern, which we have already identified its trend line. Looking at this chart, even if we zoom out a bit more, this situation, frankly, is frightening. Because breaking structures would mean we are talking about quite negative scenarios. But the reality is that we remain positive. And in fact, we consider this a good time to look for buying opportunities. And why do I say this? Going back to the chart with a bit more zoom, we could easily be talking about a bear trap. And what does this imply? Well, that the price does whatever it wants, continues consuming time, and then re-enters the macro structure. And why is it a good time to buy? Well, we clearly need to know how to manage risk. And what does this imply? Well, it implies that we have the potential for a strong return with a tight stop loss that minimizes losses. So we're talking about the possibility of a very strong gain versus a very limited loss. That's what risk management means, and that's what we are looking for opportunities. We may not know how the price will behave, but if we move within the structures we know and analyze, we can find these points that can provide a very positive return with limited risk. And let's see what XRP tells us in this regard. Looking at this chart, it seems we are in a similar situation to Bitcoin and that we might be facing a potential bear trap. Here, due to the size of this structure, we might expect this trap to consume a bit more time before rejoining. That said, we are also facing a good buying opportunity. Always remember to have a defined and tight stop loss. In other words, we have strong bullish potential while limiting losses with proper risk management. Remember, we are talking on a macro level. Let's move to the hourly time frame to analyze this potential bear trap more closely and look for short-term opportunities. What are we seeing here? Well, what we are considering is that after this strong bearish impulse that caused the black swan, we were able to label a complex corrective pattern. And I say complex because it had a W, a Y, and a Z. Remember, it is never wise to try to reverse at the Z. And what the Z's is telling us is that it hasn't broken yet, as we were able to identify its trend line in the form of a defense zone. So until the price breaks this defense zone, the Z remains in effect. At the same time, we were able to anchor a creek over which we are considering an accumulation, which is already compressing over the creek, alerting us of the end of the structure. So with that said, we can look for buying points over the defense zone or even below it in the form of a trap, as we would then expect it to re-enter the structure and come to break this creek. Remember, it is equally important to maintain proper risk management here and set a stop loss. This way, we have the potential for a gain if the price respects the defense zone and goes for the creek break, limiting the loss with our stop loss.
And regarding Ethereum on its daily time frame, it's always good to remember the macro price structure. We are in a macro bullish channel, where we have been studying the corrective pattern of this bearish impulse, and now we might be in what we call a complex corrective pattern that ends in a Z. This complex corrective pattern usually works its own trend line, which we call the Z trend line. Right now, we're impacting and colliding with it. And it's not just because of what the correlation with XRP tells us, which I explained to you a moment ago, but also considering that Bitcoin seems to be working through a major downturn. Ethereum is also telling us, hey, we haven't breached that key structure that would define a macro bearish market. Therefore, we might consider Bitcoin as a possible trap. We need to evaluate the following. Here we could have a defense zone before breaking a creek. Very often, we see that an accumulation process before breaking that macro structure falls short. This would invite us to be very positive before something like this happens. The market, the smart money, usually doesn't work on a structure before breaking in the opposite direction. And right now, we are in that sweet spot, at that extreme, which gives us the following information. If we are able to hold this defense zone and the price tries and can't break it, friends, it is likely that a possible future break of the creek can be believed. Therefore, we should look upwards. Here, several operational ideas might come to mind, which we always share in much more detail with our Crypto Insight colleagues. Clearly, if this micro defense zone is not defended, the short-term consequence is quite clear. Let me explain the theory so you understand. When we say that large institutions are bought at a point, and that these same people come to defend their position at a more advanced stage, not letting the price break below, it means they are protecting their position. If tomorrow this zone is breached and not supported, it implies that these buyers no longer want to hold the bullish idea. Therefore, what you should bet on is the opposite direction, as the buyers are washing their hands and saying, hey, I'm out of this battle. That's why it's key to monitor Ethereum's price level of $3,044. Remember, this is a macro level on the daily chart. Notice that no matter how they do it, there can be noise, there can even be traps. But in concept, this is a market extreme. Therefore, a long-term operation betting on longs makes a lot of sense. I repeat, long-term. The result will be seen in a few months. We've talked about the noise we see here in Ethereum and what opportunities it might present. Considering the noise they might generate here, what can we expect and look for based on the price structure? Everything has been explained, and what's really catching our attention is what we see on the Cardano chart. This recent surge in its price, everything you're seeing is highly suspicious. Believe me, this will give us valuable information to interpret what might happen with Bitcoin, Ethereum, and the rest of the cryptocurrencies whose value is immeasurable. But before that, remember that next week we will start the live sessions for the English-speaking community of Crypto Insight, where we look for trading opportunities daily. To access these live sessions, one of the requirements is to be a BitUnix user with our referral link. BitUnix offers a futures market with a vast number of products, and the list keeps growing. It also has a truly intuitive platform where we have everything necessary to work with our operations. What's very important is that you will be able to access BitUnix from anywhere in the world, including the United States, and it doesn't require mandatory KYC. If you deposit 50 USDT, you will get 50 USDT in futures bonuses, and if you deposit 100 USDT and your trading volume exceeds 3,000 USDT, you earn 100 USDT in futures bonuses. Basically, next week we will open the access form for Crypto Insights live sessions, and let me tell you that in that form you must be our referral. I will leave the BitUnix referral link in the description and pinned comment of this video. You will also have to deposit 100 USDT and do some trading. At the same time, you will earn these bonuses that BitUnix offers. So, if you want to access our daily live sessions that we will start hosting on our Telegram channel for the Crypto Insight community starting next week, open an account on BitUnix. I'll leave our referral link in the description and in the pinned comment of this video. Don't think twice, do it now. Regarding Cardano, we must remember that we have seen the price go back to the origin of the breakout right here. Remember, this is the origin of the breakout, and this is its revisit, a key level where the price usually reacts. It doesn't surprise us in the slightest how Cardano has reacted as it did. Now, moving to a lower time frame, the 1-hour chart, we place the creek at the price level of 0.42. Here we see a macro level compression. What's really catching our attention is how Cardano is rising in a somewhat strange manner. I fully distrust this rise. As you've seen in the analysis of Bitcoin, XRP, and Ethereum, you know that especially in Bitcoin and Ethereum, we are at a key extreme level, which if lost, we will see a significant downturn in the short term in a small time frame like 1 hour. It wouldn't be the end of the world. We're talking short term. So if we see that Cardano has the price level of 0.42 being so crucial after seeing this impulse and this strange continuation that nobody believes, the usual expectation would be for it to collapse, to impact against the macro creek, and from there, wait for the real move they want to make, which is to drive the market down. What if Bitcoin and Ethereum don't hold the defense zone and start to fall? This would imply that Cardano doesn't need to reach this creek to seek that reaction, but rather would react at a key market point, which is this event right here. These highs are closely linked, but then the big brother comes and says, hey, something's happening here and I'm turning back. This point is crucial and vital. We move it to the right and simply want to consider that in the event we lose the Bitcoin and Ethereum structures on the downside, we understand why Cardano doesn't go to the macro creek. This would make sense if Cardano starts a potential correction from here. In the end, it's a control point. We shouldn't be overly attached to it or give it too much importance. We are just trying to understand why the price would do something like that and not go for the macro creek. That's all. But remember this rise is hard to believe if it wants to keep going up. Perfect. We know where the macro creek is, and here with the Crypto Insight team, among other levels, we already know what to do. If you found this advanced technical analysis interesting, let me know in the comments. Also, give the video a like. Subscribe to the channel and click the bell icon so YouTube can notify you of future updates. Share our content with your friends and other trading and cryptocurrency communities. Good luck with your trading, and see you next time.